Hello.
Okay, Omkar, we are on. Welcome, friends, to the Dirty Economics live market analysis. Today, we'll have a look at the Indian index Nifty 50. So, let me introduce myself. I'm Kaushal Sharma, and we are joined by Mr. Omkar Godbol. Omkar is a financial analyst who has an expertise in the markets from the past 6 years. He has been an analyst in the forex markets for quite some time right now. Besides this, he takes great pleasure in covering the derivative sector as such. Nifty 50 is one of his favorite indices. So we'll have a detailed explanation with Omkar regarding where the Nifty is headed, what are the risks, what global cues are affecting the index, and what's the outlook ahead. So, hi Omkar, how are you?
Hi, Kaushal. I'm doing great. How are you?
Fine, I'm fine. Thank you so much. So, yesterday we spoke about, we look at the chart of the Nifty and we were just talking, and I told you that I was bearish on the Nifty, but then you
Right.
came up with a call that I guess it was if we were below 8050 on a closing basis, we'll be bearish.
Right. Right.
So today, when I looked at the markets in the morning, I was quite happy. Actually, I saw the Nifty falling down. So what I do is in my charts, I have something called as Bollinger Bands. I'm not an ace analyst as such, but I sort of copy people from here and there. I read the basics and I do it.
Okay.
So I found that the on the 15-minute chart, the index just touched the lower Bollinger Band and it bounced higher. So
Okay.
all in all, if I had a booked profit, then I would have made around say 90 points.
Okay. Okay. Great.
So I'm not a great analyst, but okay. When it comes to technical, I'm a little bit sound, but when it comes to fundamental, I'm not.
Okay. Okay. No issues.
Okay, so let's start. What I used we and I was looking at the news channels in the morning, and I found that people keep talk about global markets. People keep talk about global cues affecting the Nifty as such because we have something called as
Right.
fund flow. And today the
Right. Right.
London market was closed, so I guess we couldn't do the 1:30 p.m. trade as such. So,
Right.
can you give some insights? What global cues are actually have actually affected the Nifty till date, and what is the risk ahead for the coming week and the coming months?
Okay. So let me begin with crude oil first.
Okay.
It's ironical that India, being a net importer of crude oil, still benchmark indices, both Nifty as well as Sensex,
Yeah.
took a hit in early part of this year.
Okay.
And that was mainly because global markets were falling. Now, the irony is this that United States or European Union, they are battling deflationary forces and they need higher oil price.
Right.
And just because oil prices were going down, there was widespread belief that this would turn into ugly deflationary crash, and equity markets just fell in US as well as in Europe and Japan. But
That's
what's ironical is that in Indian markets should have actually rallied,
okay.
because crude oil came down so sharply. It is always better for Indian economy as such, because it brings down the import bill.
That
But
is right.
if you look into history, it's ironical that every time there is a sharp drop in oil prices, Indian markets just don't reply to it in a positive way.
Okay.
Actually they should, but that doesn't seem to happen. And one explanation for that maybe is the domestic investor participation in Indian markets is very less.
That is
So the movement that we see in Nifty is more reflective of the global sentiment rather than the domestic sentiment. So a common man, let's say he sees crude oil falling, he is happy about it. But just because he is not a major participant in the equity markets, Indian equity markets,
that is
his
right.
opinions are not being reflected in Nifty.
Yeah, true. We still believe in investing in physical gold as such. So other day
Yes.
I was speaking to my father and he was telling me that some flying bird told him that silver prices are going to go higher and he was about to buy silver. So I told him, don't buy silver, rather invest in a gold ETF if you want.
Absolutely,
But
yes.
let's forget about the old people. If we come back to the younger generation and
Mhm.
people uh, are not looking at the stock market as a investment tool as such. So
Right,
when we grew up, we were told that no, we have a lot of risk associated with stock market.
right, right,
This is a story of getting rich in a day or maybe
right,
losing
right,
everything in a day.
Right.
So the other day I came across a subreddit called as Wall Street Bets, and we were just talking. I was talking to Gus the other day, and we were just talking how people are stupid. And like, people are mortgaging their home just to bet on a simple idea. But this is what is happening in US. Over in India, over here in
Yeah.
India, we don't have a similar thing. We don't, as you mentioned earlier, that we don't have so many detailed investors as such. So what when I did my MBA, we were taught something called as portfolio management. We were told that if you're falling in a particular age group, then you
Right.
should be able to take a little bit of risk. And
Right.
my professor always told me that if you're not taking risk in life, you're not doing you're doing something wrong with your life. So
Right.
when we come back, when you look at everything right now, right, like in the morning we spoke and you told me that the PF thing is going low and
Yeah.
interest rates are going to fall. So the risk-free investor interest rate is going to fall ahead. So
Right.
I guess it's time that people start investing in stock market. They start taking stock market seriously, and we get more retail participation in the market, so that we are not so struck by the global markets as such.
Yeah, what that will do is that it will make us insulated from the overseas developments. Right
Okay.
now, the thing is that it's just FII will that gets reflected into Nifty S and Sensex. Just they just look at Dow Jones or DAX, and once these major indices start falling, they even start selling Nifty, which doesn't make sense because falling oil prices are always going to help Indian economy. There's no reason to sell Nifty or Sensex or any of the Indian stocks just because oil is crashing.
Okay. So we are basically not moving according to the books. So the
Right.
fundamentals are actually supposed to be positive for us, but we are actually going the other way. Maybe we
Absolutely.
are just neutral. We are just lagging
Yeah,
behind somewhere.
and the other thing that's on the minds of people right now is the yen story. you know
Okay.
Sharp rally in yen that we have seen in last 1 month or so, or right from Jan 29th, when Bank of Japan moved their rates to negative territory, it
Yeah.
wasn't well received. Now the
True.
problem here is that yen strength by itself is not rattling markets, but the rally in yen, it indirectly is telling markets that central banks have run out of ammo now, and they are actually feeling trapped. Because if Bank of Japan moves rates even further into the negative territory, or if they do more QE, it's not being well received by the markets.
True.
On the other hand, even if they stand pat the way they did last week, the result was still the same. Yen just kept on moving higher. So there is this feeling that maybe the game is over for central banks now. You
And
know,
so you mean to say that the markets have actually lost confidence on the central banks?
yeah, it's not confidence. They're just worried now that uh, uh, if we have next recession like the one we had in 2008, what are the central banks going to do now? If we
Okay.
again have a liquidity crisis like we had in 2008, immediately after Lehman Brothers crashed,
Yeah.
dollar funding cost had soared, and QE1 was absolutely necessary, because QE1 was not done to support markets or support economy. It was simply because dollar funding costs were so high, and the international trade, import export, everything goes in terms of dollars.
Yeah.
People need dollars, so QE1 was necessary. But now the question is that markets are not taking it positively. Whatever the central banks are doing,
Okay.
rate cuts are being read negatively. The reactions are opposite, and that's why there's a feeling that maybe it's done. The game is up for central banks, and now maybe people are again talking about some fiscal support. And no wonder then we have this crazy thing, helicopter money, going on now. Everyone is talking about helicopter money suddenly.
That is the best thing about financial markets. People don't understand everything, but we sort of come out with new terminology every other day.
Yeah, absolutely, every other day.
So coming back to the Indian markets, so what our
Okay.
central bank head did was he cut down the rates again. His whole point is that the banks can pass on that benefit to the retail users, and we can actually, people can start actually taking loans, and we can actually benefit the profits as well. But the thing is, I don't, I actually, I fail to see anything happening.
Yeah. See, I read that I take that rate cuts, whatever rate cuts are being done by RBI. It's just it's like everyone across the globe is moving towards zero level, and in such a scenario, India alone cannot stand at 8% or 9% interest rate.
Yeah, that is right.
Yeah, so it's just the global environment that the rates are going lower, and there's no other alternative for RBI to even move rates lower. The other thing is that we have always heard this, that rate cuts and rate cuts leads to weakness in currency, and then it helps exports.
Yeah.
But it's not going to help exports. But the problem is that if you don't cut rates, your currency becomes strong.
Okay.
And the problem in current environment is that, let's say I'm a FI sitting in United States or United Kingdom. Now
Okay.
I know that my central banks are doing QE, and they might cut rates. They might move into negative territory. Now, as a FI sitting in United States, I would not want to invest my money in Germany or in Japan, because I know there is a currency risk that
Yeah.
when I invest and when I take profit on my investments, when I bring my money back, maybe the exchange rate would have moved significantly,
That is
and
right.
it will eat into my profits. But now, if we have a country like India who is not cutting rates, and who is happy with INR strengthening across the board,
Hmm.
so what that will do is that FIs won't have to worry about exchange rate risk.
Okay.
So it will be simple trade. They'll just come here, invest in Nifty or Indian bonds,
Okay.
and they'll simply take out money. Now, assume if I invest in a Nifty when it's standing at around, let's say, 8,000, okay,
Okay.
and 2 years down the line, if I decide to take profits, at that time, even the Nifty is trading at 8,000. So I haven't actually made any money on Nifty.
Okay.
But if RBI, avoids rate cuts and keeps rates high, what that will do is that over a period of 2 years, rupee would move from, let's say, uh,
66.
60 to 65 to 60 or 58,
Okay.
and that would what that would do is that FIs will not have to worry about their exchange rate.
Okay.
The hedging thing would be gone,
Okay.
and that could actually lead to a serious bubble in financial markets, because once FIs see that they do not have a currency risk over here,
Okay.
they would start pouring money into Indian markets like crazy, and that
Okay.
is something that could actually hurt in long run.
Okay.
And plus, as I said, if they don't cut rates in line with other central banks, then they risk keeping their currency strong, that is INR, and that would eat into their exports.
Okay.
Now, it is important to note that cutting rates and weakening currency will not help gain more export share. But if you don't do it, it will surely hurt your exports.
So basically, in one way or other, Raghuram Rajan is actually fighting the FIs.
Yeah.
The stock market as well.
Yes, yes, absolutely.
But is this the purpose of a central bank? I'm actually very confused. I read the
Central bank's mandate is actually central banks came into existence just to achieve the price stability.
True.
And yes, it's not a central bank's function to support stock markets or do QE just to support stock markets, which I think Raghuram Rajan has always maintained.
Yeah.
He is never in favor of just cutting rates or pouring liquidity into markets just because census is coming down. No, he doesn't care about that. But yes, he has to take into account the effect of INR on price stability as well as economy. And
Okay.
I think that's what he's doing really well.
Okay, so we have a pro Raghuram Rajan supporter over here. I'm not
Yeah,
so
yeah.
well wise with everything as such, but let's see. I'm I'm on your side supporting Mr. Rajan. So coming back to Nifty.
Yeah. Now let's look at the Nifty chart. Uh, uh, Here's a daily chart, Nifty
Okay.
daily chart, and we quite clearly see that
Oh, okay, we
we
see a bullish break.
yeah, it is a bullish break. We had a sort of a big downtrend from March 2015 till February, or less than April 2016. So almost a 1 year downtrend line was established, and that was breached just few days back.
Okay.
But it turned out to be it wasn't really a breakout. It turned into a fake out because we now have a double top sort of a formation on daily chart. If we zoom in, you have one top on April 21st around 7978, and now the second one was around 7991 on April 27th,
Okay.
and the neckline stands around 7822 levels, which has been breached actually.
Okay. So
So just going by, the double top formation, one may be forced to think that correction would be due now. But we can also take into account the rising trend line. Even that looks like to be breached
okay,
today.
that has been breached. So
That has been
most
breached.
probably if we have a open negative open tomorrow, we are actually heading lower.
Yes. So, and that's why the other day, I guess, when we were talking, I said, a daily close below, I guess, 7,800 levels or so would be very bearish, because there is confluence of a lot of technical levels. This rising trend line comes around 7820, 78 levels. You also have a inverse head and shoulder neckline, which we extended. If it comes around 7860, that is quite far away.
Okay.
We also have a 200-day moving average. It's around 7852. So a lot of technical levels over here. I guess I don't see it immediately falling very sharply,
Okay.
but the trigger would come in the form of repeated failure around this zone of 7800 to 7860.
Okay. So hopefully we should have a trigger this week. And
Yeah,
I'm personally not bullish on the index.
right.
And,
This
keep
equity
going
market
forward.
rally did catch many of us by surprise actually.
I was not so bullish on the index. I don't know why. I saw a lot of people talking that Nifty, on the in the past year, people saying that yes, Nifty is going to rise to 16,000 and whatnot. So I still wasn't convinced, and I don't see Nifty going to a
Yeah, now
16,000.
the momentum is actually, the bullish momentum uh, may have actually ran out of steam. The one reason why I feel is that I always look at the gaps, gap
Okay.
up and gap down
Yeah,
openings.
we still have that gap to be filled.
And if we look into the chart, this is the first gap, I guess, after March 1st closing. Index open higher on March 2nd.
Okay.
And the second gap, we had a bigger gap was after April 12th. On April 13 again, March again, Nifty saw a gap down opening. So what I believe is that first gap after a bottom is usually a sign that a bullish momentum is gathering pace.
Okay.
The second gap usually indicates retailers are coming in now.
Okay.
HNI retailer money is coming in now.
Okay.
And the third gap is usually the last one, where most ground level retailers, they look at the index and they say, oh my god, Nifty or Sensex has rallied by 2000 points or 3000 points. Let's start investing. And
Okay.
that is usually a sign of a top. So I'm actually looking for a third gap up opening.
Okay. So you're looking for a break gap
No,
up higher. So maybe it will be a sign for a bullish continuation.
no. If I see another gap up opening,
Okay.
uh, that would be a sign of exhaustion. I would rather look for a sell trade there.
Okay. So the third gap would be indication that the dumb money is entering, and when the dumb
Right.
money enters, we are going to sell.
Yes, exactly. And that could result actually in a sort of either this double top could actually turn into triple top
Okay.
sort of formation, or it would be a consolidation between 8,000 to 7,800 levels, and
Okay.
then we would have a bearish break.
Okay. So what do you think would be the catalyst for this? So the right now, economic like fundamental of our country, if you see, we are not doing so bad. We're
Yeah,
actually doing good. The
yeah,
like in the morning, yesterday you told me that if you want to invest, just look at the cement stocks, the cement sector, the
yeah, yeah,
infrastructure, anything related to infrastructure.
yeah.
So today we saw FMCG. FMCG was down. Only the metals index somehow it was on the positive side.
Mhm. Yes,
So I don't think that the infrastructure stock will actually lead us too high. It might only aid us to maybe consolidate in a particular levels, but then we will need a break either higher or lower. So what do you think will be the catalyst? Will it be something related to global cues because we have the Brexit ahead and
right.
we also have the June decision from the Fed, and again, we don't see the Fed acting. But if the Fed doesn't act, and suppose if we don't have a Brexit, where do you think the our index is heading?
That kind of scenario is looks really super bullish, right? Fed doesn't act, and then the rate hike bets. I look at it this way. It's the problem of timing for Fed.
Okay.
Even if their economy keeps on improving, it's all about executing it correctly. And the Fed meetings have been scheduled in such a way that it would be very difficult. The next major Fed meeting comes just a day before Brexit referendum.
Yeah.
So I don't know how they are going to manage to raise rates. Then after it will be election time, and then directly we have December. And till December, whether economy holds up well or doesn't hold up, it's all it's too uncertain. You really cannot predict it. What will happen after 6 or 7 months down the line?
Okay, so we'll probably have uncertainty and some volatility into the
Yeah.
EU referendum, and I guess it should gather pace by the end of May. We should have a clear outlook regarding whether the UK is going to actually exit or whether they're going to stay.
Yeah.
But the transition phase is going to be actually pretty lengthy. So we have seen analysts predict like it will take at least 3 years for the UK to completely exit Brexit.
Yeah.
So I
Yes.
don't see a scenario over here actually that will be majorly impacted by Brexit.
Even if we have even if Brexit, leads to a big shakeup, that would be a buying opportunity because, just forget about all the noise that, UK media will create about Brexit and whatever IMF or Obama or anybody had said that Brexit would be as a serious issue or things like that. If we isolate ourselves from that, India has really got nothing to gain or lose from Brexit. If UK stays in EU or if UK does not stay in EU, it's not going to hurt India that much.
Okay.
So even if we have a fall, let's say, UK votes to, leave EU and yeah, we have Nifty back to 7,000 level, let's say,
Okay.
that would only be a buying opportunity,
So we'll only see FIS pour in.
Yes, there's no reason why it should affect India in any way, any sort of way.
Okay.
In
So
my opinion, the bigger issue for India is monsoon.
okay, that's right.
Yeah. So if monsoons don't fare well, that would really weigh on Nifty, and on top of that, if Fed decides to hike
Hike.
rates in June,
Okay.
then we are back to 7,000 or 6,800 levels. Otherwise, I don't see anything much happening. Maybe a drop to, let's say, 100-day moving average around 7,500
Okay.
or 7,400 levels, and followed by consolidation in 500-point range.
Okay. So maybe even if we have a very drastic change in the global scenario and we have a very horrible monsoon,
Yeah.
you're saying that we won't drop below 6800.
Yeah. Ideally, we should not go down below 6,800.
Okay.
And the other logic I usually use to find a bottom is I try to see the depreciation in INR, and I add that value into Nifty. For example, the previous high in Nifty was 6,300. Before this Modi thing started gathering pace,
Okay.
that was a 6,300 high, and at that time the average for USD INR used to be like 52 or 50. It's like 3 years back that I'm talking about.
Okay.
May 2013 or Feb 2013. Till then, the average for USD INR was 50, 55, something like that.
Okay.
And then we suddenly had a crash in INR. It went to 68, and then came down to 62, and then just stayed over there.
Okay.
Okay, so now if we look at it this way, INR fell by let's say from 50 to 60. It's like 20% depreciation in INR,
Okay.
right?
Yeah.
So that actually represents the loss in the value of money, our money. So the value of rupee has gone down by 20%, which means whatever we measure in terms of rupee has to go up by 20%, right?
That is right.
So we also measure shares in terms of rupee. So the base in Nifty will shift up by 20%. So in 6300, if we add a 20%,
Okay.
it comes to around 1200 points, right?
Yeah.
If you add in 6300, if we add, let's say, 1200 points or 1000 points, it comes to around 7300.
Okay.
Now, when INR had crashed to 68 levels, Nifty had gone down to 5400. So from there, from 5400, if we add around 1200 points, it comes to around 6800 or 6600.
Yeah.
So that's how I calculate the base. That's why I do not see it going down below 6600. It's not because of fundamentals or just because Indian economy is strong. It's it's simply because the loss in the value of your currency
Okay.
usually gets reflected in form of rising share values or rising prices.
Okay.
And this is an Austrian view of economists. Keynesian economists will not agree with this,
Okay.
but
No, I get
I
it.
find it
So
more
basically,
appealing.
you're calling the
Austrian view.
bottom in the Nifty around 6800.
I guess anywhere between 6400 to 6800 is a long term bottom in Nifty. We should not go down below it until and unless we have a 2008 like Lehman Brothers meltdown.
Okay. So hopefully we won't have it.
Yeah,
So
hopefully we don't have.
what are the derivatives markets? Uh,
Sorry,
uh, what is the derivative market suggesting about the Nifty?
I haven't really looked at the open interest right now, but option IVs are at normal levels. So there's nothing really to worry about right now.
Okay, so maybe we'll have something by May end.
Yeah, this sell in May and go away thing may come into effect. We may have a 300, 400 point drop. But
Okay.
again, I use a very simple rule. When something becomes a common sense, it stops working in markets. This sell in May and go away thing is now everywhere. Every retail investor, every news website just keeps on hammering this. Every year, the media starts talking about May has arrived and there is always a selling in May. So I guess this sell in May and go away thing is now it's a common thing, and it won't work in markets.
That is a very good strategy used by smart money actually.
Yeah,
They use it to fool the retail traders, and these guys will go on selling, and they'll get good levels to again
yeah.
buy in. So if you see a 300, if you're seeing a 300 to 400 point fall,
Hmm.
that will be actually if you're calling a bottom, and if you're about to see a 300 to 400 point fall, you will have very good levels to actually buy in. And I
Yes,
guess the
actually.
okay, okay, that's good.
In the short run, I guess this anywhere around 100 DMA. It currently stands around 75, 66 levels.
Okay,
In the short run, anywhere around this, we can attempt going long.
okay,
We another 3 or 4 days, and we will also have a bullish crossover between 50 DMA and 100 DMA. They are almost there now.
okay.
So that would again give reason for technical analysts to initiate buy calls on Nifty.
Okay, so I'm actually bearish with a target around 7700. I'm not expecting it to fall much lower.
Yeah, that can just happen within a day as well. I guess this yen thing is currently just weighing over markets,
Okay,
and people are many say that markets are actually reading too much into yen, but it's a serious issue because let me just show you a quick chart here.
okay, so right now
So
if you
we
see Kuroda has nothing left to add on the markets. Like we spoke about some days back, and you told me that people were expecting Kuroda to add onto QE, but he didn't, and actually this is the reason, one of the reasons why yen strengthened.
see he can keep adding as much as he want. Problem is not about addition. Problem is about its effectiveness.
That is true. He already owns 51% of the ETF market. I don't know how much
Yeah,
that
and how much can he buy? And the more he buys, the more he becomes the owner of stock market. And tomorrow, if we have a stock market crash, maybe even Bank of Japan would have to file for bankruptcy. Who knows?
point noted.
Okay, so what I was talking about is this. What I've done is just I've put a USD JPY chart onto Dow Jones
Yeah.
comparison chart.
Okay.
Now, if we look at on a weekly time frame,
Okay.
it's a scary picture in a sense that since I remember USD JPY like bottomed out in 2011
Okay.
around 75, 50 levels or so. And since then, it attempted a minor recovery, went up to around 84 and then fell back again to 77 levels. And this was around November 2012 when Japanese uh, uh, election was nearing.
Okay.
And we had Prime Minister Abe talking about his three arrows and how he's going to unleash monetary expansion and fiscal stimulus and then reforms.
Okay.
And since then, USD JPY has been on a one-way route, to higher.
Okay.
And just look at the tight correlation between Dow Jones and USD JPY.
Okay. Yeah, I see.
Yeah, from 2011, it just looks like a yen-funded rally
That is
in
true.
Dow Jones,
True.
and that is why it's actually scary because if you have yen falling, yen gaining now, and Bank of Japan is just like it's trapped. So, who will fund the rally in Dow Jones now? If
That is
if yen if yen starts, if yen is on the front foot and is rallying so sharply, I guess it could force investors or traders to unwind their carry trades in yen.
okay.
And that unwinding of carry trade can indeed pull down major indices across the globe, because you can do this with FTSE and GBP JPY. You can do this with DAX and Euro JPY, and the correlation is similar, is extremely tight correlation, and it only tells us that it was yen funded rallies since 2012.
Okay.
And now that if yen is gaining strength,
Okay.
who knows, this can single-handedly pull down major indices.
So this can be a warning sign for the Dow, and if Dow is going to fall, we'll see the Asian markets fall.
Yeah, that is again a sad story. That if Dow Jones is a global benchmark, so if Dow starts falling, Nifty and other Asian indices will go down as well, unfortunately. But from this chart, you can also think of this. If Japan can't do it anymore, if Euro is already doing it, ECB, and then I guess we may be heading back to Fed again. Who knows? They can
Correct.
forget about rate hike and they can move towards rate cut and QE or whatnot.
Oh, that would be disaster.
Yeah, that would be disaster. But overall, it says that we are not going to see fresh highs or fresh rally in Dow Jones.
Okay.
But
So-
again, I would also state that we are not going to see a crash as such.
Okay.
One reason again is that since 1987, United States has been in a 7 to 8 year cycle, and there was a crash in 1987, stock market crash.
Yeah.
Then Fed lowered its rates. Then 2 years were like just flat, no growth. Then economy started recovering. Then they had another 2 or 3 years of stellar growth. Then came another crash in 1994.
Okay.
The cycle followed again. They had another crash in 2000, dot-com bubble.
Yeah.
Then another cycle was witnessed, and we had a 2008 crash.
Yeah.
The thing now is that again this has become a world famous thing that United States is always in a 7 or 8 year cycle.
Okay.
So now everybody is expecting crash, and in markets when everybody expects something, it never happens.
No, the opposite happens always. So if you look
Sorry?
at the chart, the opposite happens always.
Yeah, exactly.
If you look at this, you can see that if you look at the correlation right now, we can see that Dow is still resilient. It is
Stay resilient, exactly. Yeah.
It is not ready to fall. So I guess I feel that Kroger is going to add ahead, or he's going to do something that will prop up USD JPY again, and no yen bears will be in for a sad day.
Yeah.
But
in my opinion, USD JPY can head higher, or
Yeah.
the tide will be turned in favor of dollar only if Fed decides to hike rates.
okay, so this is right. Everything comes down to the Fed rate decision right now.
Yeah, because there's nothing left for with Bank of Japan. They cannot do anything. They're stuck.
Okay. So I guess the same, we saw the RBA on hold, I guess.
Yeah.
RBA was on hold. We saw the Brazil at hold. And I guess even Draghi is waiting for the Fed to act so that they can get some relief for their.
Yeah, exactly. I guess what Bank of Japan did, or I should say, market forced them to do. That don't do anything now, just sit on the sidelines.
Okay. So Yellen
That
will
that
be the.
actually may help Federal Reserve to raise rates.
Okay. So I
Because
guess,
when all other central banks are moving into negative territory
yeah.
and doing QE plus negative rates, Fed alone cannot move towards higher rates.
Okay.
It makes it that much difficult. Not because of that export thing or weak currency. It's simply because when other central bankers are moving into negative territory, it's an uncharted territory. Nobody knows what can happen. The
That
uncertainty level is very high, and under such situation, Fed would not dare raise rates.
Okay, so what the Fed did in the recent minutes was actually they just omitted the thing of global impacts as such, but somehow they are still taking this into consideration, right? They
Yeah,
are still taking the global impact into consideration, but they just let it go out of their minutes.
yeah. As I read the decision, to come out dovish in the first quarter was due
Okay.
to two things. First is because these other central banks have started moving in uncharted territory. You never know how markets would react to negative rates or things like that.
Okay.
So that's why Fed decide to turn dovish. Another reason is that Q1 is always the weakest quarter in United States.
Yeah.
So now they know that Q1 is weakest, then why just move rates in Q1 again? That would only add to the
Weakness.
pressure on economy.
Okay.
So they may have just thought, let's come out dovish and support the economy somewhat. If it doesn't support economy, at least it won't add to the pressure.
Okay.
So they might consider moving in June, but as I said, there is Brexit and whatnot.
Yeah. Yeah, I am still on the bullish side. I still feel that Fed will send a very positive message into June because when I read the minutes, well, frankly speaking, when we read their old minutes, the concern about the global situation was actually directly related to China.
Yeah.
I guess China is basically consolidating right now. Maybe they won't stoop down so much now. I guess they'll balance themselves out, and Fed has sort of figured it out. I
Right.
guess they are going to send a very strong signal in June that they are going to act ahead. Now, I'm not sure that Real may do it, but at least sending a strong message will balance out most of the situation in the global.
Okay. Yeah, I guess if they, you know, they might also look at exit polls. You
Yeah,
Brexit exit polls.
Brexit
If
and US elections.
Remain votes, maintains the lead or extends the lead, then
Okay.
they might think of moving rates in June as well.
Okay, that is a possibility. That is something new. So we should get a clear picture by May end. The news
Yeah,
guys
of
will
course.
start bringing in more news. What?
And as far as US economic data is concerned, NFP is now not that important. Payrolls, because labor market strength is a well-known fact. Everybody knows about
Yeah,
it.
even
It's not.
even Fed recognized it. Fed noted it down in their minutes.
Yeah.
That
Now
they
the main concern is wage inflation. If wage figures are not strong,
okay.
then the rate hike bets would drop further. Single NFP single-handedly cannot push up rate hike bets now. It's all on wage figures.
On the wage figures. Okay. So we will still have a payrolls Friday.
Yeah, we still have a payroll Friday, and
Okay,
I
that
guess
is
we can
amazing.
discuss scenarios for payrolls on Thursday, if possible.
Yeah, we can do that Thursday.
Yeah.
Are Indian traders interested in the payrolls figures as such? Do you think there is some relation between payrolls and the Nifty directly?
There won't be a direct correlation as such, but
Okay.
traders do watch payrolls figures, especially metal traders do watch.
Okay.
People who trade copper or gold, they do watch NFP report. Even equity traders do watch payrolls report, because the payrolls has been the center stage, or the main focus point for Federal Reserve since 2008,
Okay.
because they have this dual mandate of price stability and employment.
That is right.
So a lot depends on payrolls. So yes, Indian traders also do watch payrolls report, but of course, I don't think the individual traders must actively follow payrolls report. It's usually fund managers, or
Okay.
big time analysts, big shot analysts who look at payrolls.
So maybe we can educate the normal retail trader regarding the possible impact of the payrolls on the metals
Yeah,
sector
of
in
course, we
India.
can do that.
Maybe we can do an educational piece on Thursday.
Yeah, of course.
Okay, Omkar, it was nice to have a chat, and finally we actually figured out how to do a video.
Yeah.
See how many views we get tomorrow, maybe how many comments we get tomorrow.
Okay, no problem. Yeah, it was good talking to you.
Same here, Omkar.
Yeah.
Let's catch up tomorrow. Let's see how we are going to move ahead on Thursday.
Okay, okay. Yeah, let's
Okay.
catch it tomorrow. Okay.
So hope you all enjoyed. If you have any comments, please drop them to us. Just tweet us at Dirty Economics. Maybe just email us at dirtyeconomics@gmail.com. Check out our website, dirtyeconomics.com, Omkar. It's pretty amazing views on macro and currencies on the website. If you have any queries, just tweet us, just contact us, and we'll get back to you. Hope you had a nice time. Sorry if the video was too lengthy or too boring.
Thank you for bearing with us.
True, true, true. See you guys. Tata. Bye bye.
Bye bye.